Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday as we say on the islands. It is the 12th day of September 2014 and this is the daily report for gold and silver, our weekend review, and we're going to end the week on a lower note again. Gold currently trading down about $11 on the day. Current print is roughly $12.29 and change. It has had a high of $12.39.80 and a low of $12.27.90. Silver also trading under pressure, but not nearly the kind of pressure we're seeing in gold. In fact, platinum is unchanged, palladium up $7, silver down 4 cents on the day. Current print on the screen, 1861. It has had a high of 1866 and a low of 1841, so it is well off of the lows on the day. Traders, there's no doubt, we were late for the party, but we did end up initiating short positions earlier this week in gold. In essence, I was hoping to see some kind of support come into the market. We knew that we had trouble at 1280, but I really wanted to see a couple of things. The first thing was whether or not this support line for our compression triangle, the support line created from the lows in the market, would hold, and then 1261 would hold. Because what I wanted to make sure we didn't get trapped in is a scenario in which we go above, in this case below our support line, only to recoup the following day or very, very quickly. So I was hesitant in putting the short position on. At the point in which we broke below 1261, if you recall, we had a series of up days that were surrounded by down days, but we did have this support right in here in which it attempted to find some support at 1261. Of course, when the market broke below 1261, that's when we actually made our call. We're in at roughly 1250, 1249, right in this area. Market currently trading at 1229, and that's a pretty precarious position, and let me explain. So I've gone ahead and compressed our chart so we can get a little better feel for what we're looking at. But if we consider this the single greatest rally we had this year, a couple $100 plus rally, and the 76% retracement, the 61% retracement, of course, is 1261. And once we broke through there, my sense was that at minimum, we would go to about 1230. I also stated that if we had a dynamic break below 1229, and this is the key, on a technical basis, we really don't have any real support that comes in until this, currently the double bottom at 1180. And the reason that I say technical basis and say it twice is because if this market does break below this area, and there's no technical area to look for support until 1180, it's really going to be a fundamental factor, kind of a flipping of a switch, so to speak, which causes the market to break and to move back up. On a technical basis, I believe that they'll continue to sell this market, all things being equal. Now, the stock market was down today, so we've had some real pressure there. And the dollar itself was a little bit stronger on the day. We'll pull up a chart in a little bit. But now that we're under 1229, for those traders in this particular short trade, we will look to tighten our stops. And really what we want to do is get a little bit of territory behind this 1230 if it continues to break, and then place our stop just above this one area, meaning 1230 to 1235, somewhere in there. And that will protect some of the equity that we had as we shorted the market right in here. So the key is this: the market's really fallen a lot, and I did react late to the party, as I said, but it was really a matter of caution rather than belief that this market could go lower. As I said, once it broke through 1261, and prior to that, the breakout below this support line really signaled to me some critically lower prices. Because as I've been stating, when you look at something like a compression triangle, when you reach either the apex of that triangle or it breaks above or below your critical support on the bottom and resistance on the top. If it breaks above or below, there's usually a release of energy. And that release of energy will really move the market to a fairly dramatic point. And when you consider over this last week, we have had pretty much nothing but down days. This is Friday, Thursday, Wednesday, Tuesday, Monday. You can really see Monday is when we dramatically broke below the 61% resistance. And as I said, it does appear as though it's going to close below the 76% retracement. 76% retracement, anything below that, there's no bullish model in the world that will fit. You've got to go back to a bear model. And that's quite evident when we consider this move from what? Roughly 1340 down a little bit over $100. So traders, what about silver? Well, I had hoped as we saw gold break, I took a look at the fact that we had this really long-standing support line in which over the last year and a half, we really only broken into this area twice. And I thought with a strong equities markets, you might in fact see some sort of a bounce. We're neutral in the market. In other words, we have no open positions in silver, but we saw a clear break below 1980. Critical support level. That's this whole level right in here. Of course, we do have these lows that are probably sitting at about equal to where this market closed at. Let me try to get that as straight as possible. Yeah, it's about equal. So my sense is it could hold here. It's not that likely. What's more likely is we'll see the market make a play for these lows here. And these lows, if I am correct, they occur roughly at around $18.20 per ounce. So if we see a continuation of a weakness in the precious metals markets next week, I would expect silver to follow suit. If we see a very, very strong equities markets, we could get a boost from there. But all things being equal, we could make a play for about $18.20 in silver before it bottoms out. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week on Monday for another daily update and review. Bye-bye.